All right, so the interest rates just increased at a really, really high rate. What does that mean for home prices in the real estate market? Hi, I'm Jim Fong with Urban Nest Realty in Las Vegas. I am an investor and realtor in Las Vegas, and I just wanted to give you a quick little update today, all right? One of the most common questions that I'm getting from everybody right now is, oh my God, have you seen the interest rates? They've gone up so much. What's gonna happen to the market? Are we gonna see a crash? Are prices going to come down? Or are interest rates gonna come back down to what they were, okay? So those are the questions I'm gonna be addressing in this video. So first things first, all right? Let me take it back a little bit here. So we're in May of 2022, all right? Just a month ago, we were seeing interest rates like in the 3s, all right? We come to today, and we're in the 5s already, all right? So interest rates did increase at a very, very rapid pace. This does not happen normally, all right? Interest rates for mortgages, they go up and down on a daily basis depending on the markets and everything, but you'll see like a quarter point, an eighth of a point or something like that go up. But to see interest rates go up 2 whole percentage points, like just in like a month, is very crazy and it's very drastic. Let's think about why they did this, all right? Everything has been moving up in price so much, so fast in the last 2 years, all right? Inflation is a huge concern for a lot of people right now. So what the government thinks that they're doing is, let's increase the interest rates so we can slow down the price increases that we're seeing, right? Because our real estate market went up, they say about 30% in the last 2 years, which is a very, very rapid pace. Nothing that we've seen before. So to counteract that, they've increased the interest rates at a very, very rapid pace to try to curb the increasing prices, all right? Because things are getting unaffordable, right? So they're gonna try that right now. But before we dive more deeper into what's to happen, let's look back a little bit, all right? So let's think about prior to the pandemic, all right? We're seeing interest rates like, maybe like around, high 4s to the mid 5s maybe, right? So that was before the pandemic. When the pandemic happened, they dropped interest rates to help people out. They were in the 4s, right? And then they continue to drop them. Now they were in the 3s, right? I even know of people that were getting interest rates like in the 2s, all right? So after that happened, prices of homes shot up very quickly, right? It was very affordable to get a house, right? With low interest rates. So prices of homes went up at a really fast rate, and now they're trying to slow it down, all right? So to give you an idea of this here's a little math for you, all right? So the median home price in Las Vegas right now is $475,000, all right? So at 3.5% interest rate with 5% down, your principal and interest is $2,026, okay? With those same numbers, $475,000 home, 5% down with a 5.5% interest rate, your principal and interest payment is now $2,562, all right? That's an increase of over 26%, just like that in a month, all right? So it means it's a substantial increase, right? 1 minute people are having a $2,000 mortgage payment, now it's $2,500, all right? It's definitely made a difference, all right? So I do think it will work. I think we will see prices not continuing to go up, all right? They just won't keep going up like that, especially with these high interest rates, all right? But what does that mean though? I think what that will end up doing is, if homes aren't selling as fast because less people now qualify, right? Because if interest rates went up, 1 minute you qualified, now rates went up, you don't qualify anymore, all right? Which decreases the demand. And what I'm hearing from a lot of sellers is that, oh my gosh, interest rates went up. Is the market gonna crash? I better sell right now while I know I have this much equity, right? And that's what people are doing right now. In the last couple weeks with the interest rates going up, everyone's like rushing to, people are calling me, hey Jim, list my house. I wanna sell now before the market crashes. That's happening right now. So demand is going down, inventory or the supply is going up, right? So it's definitely gonna balance our market a lot more than we've seen, right? So it's not gonna be, one house on the market, 20 buyers trying to fight for it, right? We're gonna see a more balanced market now. And with a more balanced market, we're gonna see more negotiating, all right? We're not gonna see this whole, I'll give you anything you want, we'll waive the appraisal, I'll take it as is, and all this, that's not gonna happen anymore. I think we're gonna see less buyers competing with one another, and we're actually gonna see sellers competing for that buyer now, because a lot of buyers no longer qualify now. So now the sellers are going to have to compete with each other a little more. It's not gonna happen as easy, all right? But all in all, the supply is still very low though. So I mean, if you were to consider it, is it a buyer or seller market? I wouldn't call it a buyer's market, but it's not just an outrageous seller market that we've been seeing either, right? So those are my predictions, all right? So we're gonna see more negotiations in real estate now. It's not just gonna be, whatever a seller wants, all right? Oh, my neighbor sold for $500,000, I want $550 now. Those days are done, I believe, all right? You're not just gonna arbitrarily add an amount just because you feel like that's what you want, right? So that's gonna change. Days on market will probably also increase too. So median days on market right now, it's like 1 week, all right? I don't think things are gonna sell as fast now because buyers will have more choice and everything else like that too. So what does that mean for you, all right? If you're a buyer and you're thinking about buying and you keep telling yourself, oh, I missed the low interest rates, I'm out of the game now. Not true. If your situation, you gotta think about why you wanted to buy, right? If you're paying high rents and the landlord keeps increasing the rent every time your lease expires, well, might still be a good idea for you to buy, right? It might not be a great idea for you to try to flip homes or something right now. Maybe that's not what you do. And sellers, what does it mean for you? Well, if you wanted to sell, around this time, maybe you have a move you want to do, maybe you want to do a downsize, maybe you're retiring or something like that, I think you absolutely should think about selling right now. I do think we probably will be peaking in our pricing this summer, so I think you should try to take what you can off the table right now while the market has been hot for you and the inventory is still low. I think you should take advantage and try to sell in this market. And like I said, if it makes sense to buy, keep buying, but don't think about the interest rates, all right? Interest rates are gonna be what they are. Over time, I remember my first house, I bought, the interest rate was like 7%. But at that time, it was considered good, so I was happy with it, right? When I talked to my dad, there was times when he's like, oh, my interest rate was 12%, right? Back in the day, right? Okay, well, homes back then were only like $100,000 though, right? So things are changing, right? So don't get caught up with the interest rates are too high now and now I'm never gonna buy. Interest rates will go up and down always, and the real estate market will adjust to that too, all right? So we talked about buyers and sellers, but what about if you're an investor like me, right? Well, what I'm gonna do as an investor is if I have any properties that are just not performing well, or they're in a location that just brings me a lot of problems, or perhaps the house itself is due a lot of maintenance, right? Maybe roof needs to be serviced or things like that. This is the time that I'm gonna sell those properties, all right? Low performing properties or properties that are just kind of, not the best ones, right? This is a great time for me to sell one, right? Or maybe you bought a new house, your primary home. You sell that, you take advantage of your primary home capital gains exemption. It's absolutely what you do right now. And what you do is you take that capital and you just kind of save it for a little bit, right? I would not jump into a shifting market right now. I would definitely wait to see what's going to happen with the prices. If we have more homes on the market and lower demand, that's when it's more negotiable for me as an investor, all right? I'll be able to maybe negotiate a better deal, get a better price. I'm not going to just take what's out there right now. I'm going to be patient. I'm going to watch this market adjust to these new interest rates. And hopefully if the prices go down a little bit, cool. Maybe if the return on investment's right, I'll buy another property, right? As an investor, this is kind of it's an unpredictable time. And, unless you just need to, unless you just have cash in the bank or something and you don't want to just sitting there losing value to inflation, well, maybe you buy something and you collect some cash flow every month for it, right? But if you don't have to do something with some money, my move right now is just to sit and watch really, and maybe sell a property that is not performing that well as some of my other properties, all right?